Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now, Ethereum is still running into important resistance, while Bitcoin just confirmed a new pattern in the short term that we need to pay attention to. So I'll be talking about that in just a moment. Definitely stick around. First of all, just giving you a really quick update here on the 4-day Bitcoin chart. And right now, as of recording this video, the price of Bitcoin is currently trading above 30,500. And once again, as I've said in recent videos here on the channel, we do have major resistance at around 30.5k based on these previous candle closes. But if you're looking at this candle wick, the top of this high that we saw during around mid-April this year, that's sitting closer to 31,000. So basically, we need to break above around 30.5k to 31k with some strong confirmation, such as a weekly candle close, for example, above 31,000 in order to actually confirm this breakout and set up a massive bullish price target for this bullish cup and handle pattern, which has completed the formation phase but is yet to confirm. And obviously, in terms of the larger trend, nothing has changed over the last few days. We're still in a larger bullish trend on the larger timeframes, as I've said since the beginning of this year. And now, if you're taking a look at the daily Bitcoin chart, once again, the price of Bitcoin is still running into this resistance at around 30 to 31,000. So at least for now, we're yet to actually confirm a breakout above this resistance. But with that being said, if you're looking at the price oscillators as of right now, for example, in the MACD, this is showing a lot of bullish momentum. So clearly the momentum and the trend is still heading in the bullish direction. It's just in the shorter term, we are running into major resistance. And also, if you're looking at the daily Bitcoin RSI, as I've mentioned over the last 1 to 2 days, this daily Bitcoin RSI is clearly in overbought territories, which basically means, at least in the shorter term, we're quite overheated, meaning the price has gone too far to the upside too quickly, and we need a little bit of time in the short term to cool off to help reset the RSI, which can actually give us some more room to the upside later on, after a bit of a short-term cool-off. Because if you simply take a look at some of these other examples where the daily Bitcoin RSI entered into overbought territories, obviously this basically meant the price of Bitcoin was approaching some sort of high, not necessarily the top of the larger bullish trend. Once again, this doesn't mean the larger trend is over. It just simply means in the shorter term, we're a little overheated and we need some time to cool off before potentially continuing higher later on. And now, another reason as to why we should be expecting a bit of a short-term cool-off is due to the fact that a bearish divergence just confirmed here on the 2-hour Bitcoin chart. So obviously, this is just a small bearish divergence in the shorter term. But with that being said, it is still a confirmed bearish divergence, meaning just in the shorter term, we're due to see reduced bullish momentum, which usually plays out in the form of either choppy sideways price action or a slight pullback in the price of Bitcoin. So once again, as I've said recently on the channel, I would be expecting a bit of a cool off, either a sideways consolidation or a slight pullback just in the short term, as in talking about potentially the next few days. And then after we play out this short-term bearish divergence and potentially reset this daily Bitcoin RSI back down towards more neutral levels, obviously once that happened, we could have some more room then to the upsides, which is when we could potentially continue on with the larger bullish trend, which is technically still active. And now in that case, if we simply continue the larger bullish trend later on and confirm a breakout above this significant resistance, then in that case, next I'll be looking towards around 37,000. And the reason behind that is because that 37k level is an important Fibonacci extension level. When you're taking a look at the Fibonacci retracement tool from the pre-FTX collapse high back in November 2022 down to the bear market bottom, obviously that brings out the Fibonacci extensions. This first extension, the 1618 level, was at around 25.2k, exactly where we saw this first significant high in the larger bullish trend before a pullback. And then obviously the next price target for the next leg to the upside was simply the next Fibonacci extension level, the 2618 Fibonacci extension, which was sitting at approximately 31,000. 17,000, which is pretty much exactly where we saw this next high come into play. And then obviously we saw a correction, and now we're potentially continuing on with the larger bullish trend, continuing with the next leg to the upsides. And so once again, all we need to see is a confirmed breakout above around 31,000 in order to potentially head up towards 37,000 being the next Fibonacci extension. But once again, it is important to understand that we first need to see a confirmed breakout above 31,000. And on top of that, just in the short term, once again, we're likely going to see a bit of a cool off, a bit of a reset in the price of Bitcoin, which can give us some more room to the upside later on. But anyway, now getting into the Ethereum part of this video, this is on the daily ETH to US dollar chart. And obviously right now the price of ETH is still trading above these previous areas of resistance, which should now be acting as new support. For example, this area sitting in between around 1770 to 1820. I would be expecting support in that area in case we actually see a bit of a pullback. And obviously in terms of the shorter term trend and the longer term trend, nothing has really changed over the last one day. And something similar can be said about the daily Ethereum price oscillators. Obviously the daily Ethereum MACD is still showing bullish momentum as of right now, while the daily Ethereum RSI is still looking more bullish than bearish after that recent bounce from oversold territories close to a week ago. But with that being said, even though the trend and momentum as of right now is still more bullish than bearish, we still need to pay attention to these important areas of resistance in the shorter term. For example, here on the 8-hour ETH to US dollar chart, looking at the Fibonacci retracement tool from swing high to swing low, we have the golden pocket, the most important Fibonacci level, which is actually an area in between around 1930 to 1940, acting as strong resistance in the short term. But if we see a confirmed breakout above around 1940, then in that case, next we have the 78.6% Fibonacci level sitting at around 2020, also exactly where this previous high came into play. And above 2020, if we actually see a breakout above that level, then in that case, I'll simply be targeting towards these previous highs that we saw back in April, sitting just above 2.1k. And as for short-term support, right now the price of ETH is finding a bit of support around this previous 50% retracement level, which is sitting at around 1860 to 1870. And other than that level, if you're zooming into the 6-hour ETH to US dollar chart, I would also expect some support at this previous descending line of resistance, which is now acting as support at around 1820 to 1830. And below that, we also have this area right here, which should now act as new support, like what we saw back here, sitting in between around 1750 to 1780. And what we can also see right here on the 6-hour ETH to US dollar chart is obviously a new bearish divergence in the shorter term, because clearly we have confirmed higher highs in the price in the 6-hour candle closes, while also confirming lower highs in the 6-hour Ethereum RSI, which once again is a bearish divergence, meaning just in the shorter term, the price is losing some bullish momentum. And so once again, as I've said over the last 1 to 2 days, I do expect a little bit of a short-term cool-off after this massive bullish movement, which is already what we have started to see over the last 1 to 2 days. We've seen a lot of sideways price action for the last 1 to 2 days, but potentially over the next 1 to 2 days, I would continue to expect at least some sideways price action, or possibly a little bit of a pullback in the short term, which once again, as I said earlier, can help to reset the RSI, which can actually give us some more room to the upside later on. So obviously, this is how trends go. We do not move in a straight line. We often run into resistance, see a bit of a setback, and continue on later. Just like how in a bearish trend, we often see bullish movements from time to time, but then we see larger bearish movements come next. Obviously, right now, we're simply seeing the opposite. We're seeing larger bullish movements and only shorter term bearish movements, especially on the larger time frames. This is quite obvious. But either way, if you want to know how to make a lot of money in crypto, no matter if the price is bullish, bearish, or simply chopping around sideways, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how to make money no matter what direction the price is going using artificial intelligence, and the video in the bottom left shows you how you can easily profit from a choppy sideways price range. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.